Gold stayed in the range yesterday, failed to break past 1985 levels, and at the same time 1970 provided it a very good support. In the two analysis released for gold, first with the Asia session, we were on buying at 1976 levels. We profited there. And then with the US session analysis, we were on sell for 1975 at the target at 1970. Both achieved. I hope you all profited. Now, how to profit trading gold today, which position you should take, we will see with the help of charts and indicators. This is the first update for the day. The next update will be released before the US session. Watch that as well. And do like, share, subscribe, and comment, friends. Your every action matters to me a lot. With that, let's start. See, first of all, if you look at the formation for gold, you will find 64.65, and since then it is just yielding higher lows, forming the base at 70.72 levels. Yes, 70.72 provided a very good support, and we can see it is yielding higher lows here. Now, higher lows, that doesn't mean that it is staying bullish, because one can also note that on the up there is a very strong resistance which exists, and then we have seen it yesterday and we are going to see it today again. 80 to 85 zone, very strong resistance exists here. Only above 85 we can say that the prices have reversed and it is going to fly high. As long as prices stay below 85, we have to remain cautious and watchful. So this is one point. If you look at the movement here, see, almost symmetrical formation here. You can find this support is seen here at 70.72 zone, and with that we have seen a rise. Now also one must note, see, these candles fail to stay above 80, and again 1980-82 zone is something you should watch out for. If you look at a stochastic, this is rising. The MACD is on the verge of a crossover. This could bring bullishness, because see, this crossover, this is formed almost flat bottom, and a crossover from here can bring little bullishness. RSI comfortable, coming to 2 hour. Now on the 2 hour chart, see, I will give you the trading levels in a strategy to profit towards the end of this. First, we have to look into detail that why these levels are required and why I am suggesting you to take a particular trade. Thus, watch till the end. Now, if you look at 2 hour charts here, so similar observation you can see, you can note here similar observation. Higher lows is most important. Higher lows, higher highs. This is coming after this drop, and thus any drop below 1972 certainly should be taken seriously, specifically below 1970s where the bears will take over, and then I will look forward to 64.65 as the next targets. Stochastic rising, MACD is still bearish. It is trying to converge. It is not yet crossed over. It is still bearish, and this crossover has come at a slightly higher level. So a possible conversion then followed with again bearish move is what we can expect. If you look at RSI, this is comfortable. It has come out of the overbought zone. And if you look at 3 hour, now see, on the 3 hour charts, what has happened here? Prices are divergent from the 20 period. It has converged towards the 20 period moving average. If you look at so far, the 20 period moving average has just provided it a support here. And if you look at the candle, see, the rise was bit bullish, then the retracement was not much that bearish, and then the reversal sign. After the reversal sign, we are looking forward to this candle here. So yes, a reversal sign and couple of greener candles, but at the same time one must note that despite being bullish here, the bullishness here is not seen, as prices are still willing to shy away, or prices are still shying away from this zone at 80-82. We have to watch out how it behaves at around these levels. Once again, I am saying a bullish confirmation on gold is only and only if it stays above 85 and then 88 levels. Beyond that, 91, and then if it stays above 91, certainly this time it is going to break 2000 as well. Chances appear to be less. The stochastic rising, MACD is bearish here. It is trading with little divergence, and this crossover has come at a higher levels, and hence it can. Now look at the rise and look at the drop. So yes, it can accelerate on the downside. RSI come out of the overbought zone, coming to likewise on the 4 hour charts, consolidation going on here, sideways movement after the drop, after the gap down, and this suggests that it is looking forward to a breakout. Whichever direction it takes, it is going to be a stronger move. On the 4 hour charts, the 20 period moving average is still far below, and 1970 now greater support. Also, if you look at the divergence, there is too much of divergence between the 20 and 50 period moving average, hence chances for it to break on the downside still exist, that gold prices might fall below 1970 today, where we can expect 1965-64, and in fact on the downside, see, I will be looking forward to this zone between 1950-45. This is going to remain the greatest support for but right now it is trying to recover. Right now it is trying to go bullish. Look at the lower highs here. This is important. Lower highs, higher lows. Consolidation is right now taking place here. Stochastic comfortable. MACD is divergent. MACD is bearish. It is looking downwards here. And again the same thing. See, minus 20 to plus 20 and now looking down. So at least half the journey it should cover, which means slight bearishness. RSI coming out of the overbought levels, coming to the day. Now on the daily charts, one must note that yesterday was a swing candle here, a swing candle, higher highs. Now let me draw this for you. Higher highs, lower lows. The highs here at 85, 87 zone. This is greater resistance, and on the downside 1960 levels. Yes, this could be a larger zone where we can see the prices swinging today. And there is a possibility that attaining the highs, we may see prices reversing. That is also equally possible, because see, this was the first red candle, and then the second red candle may initiate today, taking the prices lower. Why there could be a second red candle? You can note that too much of divergence from the moving average calls for it to converge, but it does not. It is not necessary that it always happens. It can accelerate, achieve the highs and break past on the upside 2000 levels and then reverse. That is also probably one of the probabilities which we should not. However, yes, the chances are more that it can try to converge towards the zone some point of time, sooner or later. Right now, if you look at the moving averages have crossed over. This is a bullish sign here, 1910, 1920 zone. This is a support zone, and this is a bullish sign of the crossover for the stock moving averages. See, stochastic here was overbought with one red candle. It is trying to slope down. It is trying to look downwards. Thus, this also increases the chance that immediately after taking this slope, reversal can happen. But right now it is looking downwards and it may continue. If you look at MACD, MACD is in green and trying to converge possibly. And if it converges from here, it can lead to another wave here. Now, what I say wave here is, see this. Now see this, and possibly if it converges here, it can lead to slight bearishness. RSI is over. Now we have seen the charts, you have seen the indicators. Let me give you the trading levels, trading at which you can definitely profit. And before I give you let me introduce you to the platform forexfunda.com. This is my own platform, and it is created with the sole purpose of giving everything what is required to a trader under one roof, whether be it the economic calendar and the data from across the globe, be it the charts. For example, when you click at the economic calendar, you will find all the data coming from across the globe, what is the expectation, where it is performing, and what is the impact it can have. So this is very important. Next is the markets data here, and markets data you can search anything. You can create your own charts, you can create your own strategies here, indices, commodity, crypto, anything you can search here and you will find the data. You can create your own charts, you can find out, you can add indicators, do anything. At the same time, one important feature is availability of experts. You can discuss with me anything which you want to have a query on, which you have a query on, specifically with respect to your portfolio, with respect to your existing trades, if you are stuck up anywhere, or if you want to take a futuristic position, if you want to take a trade on any specific commodities which is not covered, or even if it is covered. For example, let's say sugar, copper, soybean, anything which is getting traded. If you want to have a discussion on that, if you want to have a clarity on that, you can book a call with me and we can discuss and you can get more clarity on this. The most important feature is the availability of traders, availability of the like-minded people, where we can not only you can initiate a discussion, but you can also find my existing uploads, my existing videos, and we can have a discussion on these videos here. You can put a comment and we can initiate. Like-minded traders can also join in, and then accordingly we can take the discussion for many more. You will also find my mentorship batch, the 27th batch, which is going to start on 20th of November. You can book yourself, book your seats here. You can register here. Thus, visit the site forexfunda.com. Definitely it will add meaning to your trading decisions. Now, looking at this for the day, I will recommend you to buy gold at 1982.5, but beyond that, see, the nearest resistance which it will get is at 85.5 and 87 levels. So yes, you can buy at 82.5, but 85.5, 87 is going to be the first resistance zone, and hence you have to either book your trades there, book your profits there, or shift your stop losses and trail your stop losses, such that in case of a reversal, your trade closes in profit. So yes, buying at 1982.5 can fetch you little profits. At the same time, on the downside, I will recommend you to sell today at 1974 levels. But yes, if you are taking a selling position, or rather, let's make it at 1974, 75 zone, somewhere here you can take a sell entry. But remember, the nearest resistance zone is at 70.72. This is the zone where we are going to see maximum resistance for gold. Any drop below 1970, so bearishness is confirmed if it trades below 1970. This time we may see 64, 65, and in fact I will look forward to 60 and 50 levels as well. So yes, below 1970, the next strongest support today is 1960, and below that more bearishness may prevail. But it is still to be traded with caution. As long as 1960 is seen, you can expect a swing, you can expect a bounce back. So we have to trade with caution till then. Yes, you can sell at 1975 or 74 zone and be watchful of 70.72. Below that, yes, it is going to trade bearish. It is going to show accelerated bearishness towards 1964 and 60 levels. If it breaks 60, more bearishness is going to prevail. So take your trades. Yes, on the upside beyond 1987, 1991, first target, and then if it stays above 1991, stay long. We are going to look at 2000 levels today itself. So take your trades accordingly. Trade with a stop loss and a trailing stop loss. See you again before the US session. Watch that update as well. Thank you very much.